There's been a record number of service-based businesses that have been launched in just the last 2 years, all crossing that 10 to 30 grand per month mark. But here's what's crazy. Most of these business owners have no idea how their taxes actually work. And honestly, it's not just the newer businesses. I talk with their service-based business owners who are doing 50, 75, even over 100 grand per month, who are still completely in the dark about tax fundamentals and how they affect their business. See, the tax game completely changes once you become self-employed. You no longer have an employer who's going to be handling your federal, state, Social Security, and Medicare on your behalf. Now, instead, all of those tax decisions and payments, they're going to fall directly on you. And unfortunately, most service business owners are making the same expensive mistakes because nobody ever taught them the fundamentals. And as a result, I see them get stressed out since it feels like taxes is just a big guessing game to them. And it's not because they're doing anything wrong, but because nobody has sat them down and showed them step by step what is even possible for them in their business. So if you're a service business owner doing anywhere from 10K to over 100K per month, I'm going to be walking you through exactly how taxes work for business owners, the 3 specific taxes that you need to master, and why your tax bill isn't just some fixed expense that you have to accept. So by the end of this, you'll understand the fundamental difference between how employees and business owners are taxed, and more importantly, how you can use that difference to your advantage in 2026 and beyond. And real quick, if you want our complete 75-page financial playbook, it covers everything I'm going to be teaching today, plus 25 advanced strategies that we're not going to discuss here. Grab it free at the second link in the description. If you don't know who I am, my name's Kyle. I'm the founder of Axiom Finance. We're an accounting firm for growing business owners. We've already worked with over 10 service-based business owners and saved them $150,000 in taxes, new profits, and extra cash in the bank. And I've attached some screenshots below so you can see the kind of results that we're getting. So let's start with the basics before we do anything advanced, because this is where most business owners get lost. See, when you're an employee, your tax life is incredibly simple. Your employer withholds your money every single paycheck for federal taxes, state taxes, Social Security, and Medicare. You get a W-2 in January, and you just file by April 15th, and you hope for a refund. The only downfall is that you have virtually no control and very limited deductions if you go this route. But the moment you start earning money as a business owner, you enter into a completely different tax system. Now, you're responsible for calculating what you owe, setting money aside throughout the year, making quarterly estimated payments, and tracking every possible deduction. So there's a lot more work, and naturally, most new business owners see this as very complicated. And for the most part, it is. But here's a major thing that they're missing. This complexity comes with huge advantages, and you actually want that because now you control when you pay taxes, how much you pay, and what you can deduct. You've gone from just being a passenger to being in the driver's seat. And the problem is most business owners, they're still thinking like employees and they're acting reactive. So they're not taking advantage. Can you imagine having that level of control over your biggest business expense? So let me show you exactly how to do that. There's 3 taxes that you're going to need to navigate as a business owner going forward. You can mostly ignore sales tax, property tax, excise tax, and corporate tax. But instead, you have 3 main taxes that you're going to want to master. First is the individual income tax. This is that progressive bracket system that you're probably familiar with. The more you earn, the higher percentage that you're going to pay on that additional income. But here's the key difference. As a service business owner, your business income passes through to your personal tax return. For most of you, you're not going to have separate business tax return in this case. Second is that you're going to get hit with self-employment tax. Now look, this one catches everyone off guard. It's 15.3% on your entire net profit, every single dollar of it. Now, when you were an employee, you paid 7.65% of that, and your employer paid the other 7.65%. But now that you're in the business seat, you have to pay both halves. So let me give you an example of this. Let's say you're making $180,000 in net profit as a sole proprietor. You're going to be paying about 27 grand just in self-employment tax. And that doesn't even count adding in state taxes depending on where you live in the United States. And I'm not going to lie, it's brutal, and it's why a lot of profitable business owners eventually change their entire business structure to avoid that tax. And then the third tax to master is quarterly estimated taxes. So since no employer is withholding taxes for you, the IRS is going to expect expect you to pay them quarterly. These are going to be due 4 times per year, and if you underpay, you're going to get hit with penalties and interest. What I see most business owners do is they either overpay them and they tie up cash for months on end, or underpay and then you get surprised with massive bills in April. Either one is not a situation you want to be in. If you're sitting there and you're thinking that this all sounds overwhelming, here's where it gets really interesting. What I'm about to show you here will completely change how you think about your tax bill going forward. Because most business owners, they just treat it like their rent. It's a fixed expense that they have no control over. But what if instead I told you it's actually a lot more like your marketing budget? It's variable expense and that you can optimize it going forward. This is going to be the mindset shift I want you to have that separates business owners who constantly overpay from those who optimize and save thousands every year. Your W-2 friends, their tax bill is essentially fixed and it's based on whatever their salary is. They might be able to adjust their withholding slightly, but that's about it. They're limited. Whereas you're different. You can influence your tax bill every single month. It can be influenced by things like when you earn income, how you structure your business, what you spend money on, and when you make purchases. Every business decision is going to impact your final tax bill. But most business owners think tax planning happens once a year when they file. But it's the smart business owners that are making tax optimized decisions in January, March, July, October, all year round. They're not just waiting until April to make those decisions. This is exactly why you can have 2 business owners with identical revenue, but they can have tax bills that differ by $30,000 or more. It's because one is being reactive, one is being proactive. One treats taxes as just some fixed cost that they can't do anything about. The other treats it as a controllable variable. Picture making business decisions throughout the year knowing exactly how they're going to be impacting your final tax bill. Okay, so how exactly do you control your tax bill and pay as little as possible going forward? It all comes down to 3 specific levers that proactive business owners pull all year long. The first lever is your business structure. See, most service business owners start as sole proprietors or single member LLCs. From a tax perspective, these 2 are identical. All your profit is going to get hit with that painful 15.3% self-employment tax. But once you're making consistent profit, let's say over $75,000, you can elect S corporation status. Here's how that works. So instead of paying self-employment tax on all $180,000 of your profit, you can instead pay yourself a reasonable salary, let's say about $100,000, and take the remaining $80,000 as distributions. You only pay self-employment tax on that salary portion. It doesn't touch the distributions. And the savings on that can be about $12,000 per year in self-employment tax alone. This one move just cut that whole self-employment tax by more than half. That's real money that's going to be staying in your business instead of just going off to the IRS. Now look, before you go out and do this, S Corp isn't right for everyone. There's going to be costs and complexities. But for many service business owners that I talk to doing over 75 grand in profit, it's usually a no-brainer to do. The second lever that you have is business deductions. This is where most business owners are leaving massive money on the table, even though we all know that this exists. See, the IRS allows you to deduct expenses that are ordinary and necessary for your business. In plain English, this means it's normal for your type of work and it's helpful for you generating income. These are going to be things like your home office, vehicle expenses, software subscriptions, professional development, business meals, conference travel, phone bills. All of these things are deductible against your business income. But it pains me because I regularly see service business owners claiming 5 to 10 grand in deductions when they could legally claim so much more, sometimes 25, 40, even $100,000 extra. That difference alone could be the thing that saves you 8 to 15 grand in taxes. Now, I know why you do that. It's because you might be worried about IRS audits with more deductions that you take. But here's the truth. The IRS, they expect you to take legitimate deductions. They understand that you're running a business and you need to grow it. So don't be afraid to take them and be more aggressive sometimes. The third lever that you can pull is timing strategies. So when you earn and spend money matters a lot more than most people realize. Sometimes it makes sense to collect income this year, and other times it makes sense to defer it to next year. And the same thing with expenses, whether it's buying equipment in December versus January can impact your taxes significantly. Now, this is exactly where year-end planning becomes critical. In October and November, it's the smart business owners that are looking at their projected income and they're asking themselves, what moves can we make before December 31st to optimize our tax position? Think about what you could do with an extra 12 to 25 grand staying in your business instead of going to the IRS. Now, this brings me to my most important distinction that most business owners miss. This one thing is what separates the smart business owners from the strategic ones. This distinction is going to change everything from you from a tax perspective. Most business owners that I talk with, they just work with a tax preparer. These are professionals who are going to accurately file what happened last year. Basically, they're historians and they're documenting your past so that you're in compliance and you don't go to jail. But what you need is a tax strategist as you start to grow. Someone who calls you in October that can discuss Q4 planning. Someone that's going to help you make proactive decisions around different financial things throughout the year to minimize what you're going to owe and keep more cash in the bank. Now, obviously, good tax advice, it's going to cost you a lot more money. But surprisingly, a lot of business owners are paying for tax preparation when they need tax strategy. And the difference between these two approaches can be pretty costly. It could save you 15 to 50 grand per year just doing that if you're doing over 500K per year in revenue. Now, this proactive approach is exactly what we provide at Axiom Finance. We're not just going to be your year-end tax preparer, but a year-round accounting partner to be with you whenever you need to make financial decisions. So all of those advantages that I mentioned in the beginning, this is how you actually capture them, doing something like this. Now look, if you've made it this far in the video, you now understand something that most business owners never figure out, even as they're scaling past 7 figures. You know you're playing a different tax game with better rules that you can take advantage of, and you should. You understand the 3 taxes that actually matter, and most importantly, you know your tax bill isn't just some fixed expense that you have to accept. You can do something about it. You've got 3 levers that you can pull to make it go lower: structure, deductions, and timing. And you now understand the difference between tax preparation and tax strategy, which is exactly what separates business owners that are saving 15 to 50 grand per year annually from those who just keep overpaying and have no visibility into their tax bill before April hits. But here's the reality check. Understanding these concepts and implementing them correctly, these are 2 completely different things. All of the S-Corp elections, the deduction optimization, timing strategies, they all require proper setup, ongoing management, and somebody who knows exactly when to pull each lever. If you get them wrong, you could end up worse off than before, paying penalties or getting audited. But if you get them right, now you're looking at 20 to 50 grand plus staying in your business instead of going to the IRS. If you're doing over 30 grand per month and you want a complete financial strategy that handles your bookkeeping, tax planning, and advisory for just one monthly price without having to hire an expensive in-house CFO or accountant, then click the first link in the description to book a free financial audit. On that audit, we'll pull your last 2 years of tax returns, analyze your current structure, and show you exactly where you're leaving money on the table. Most clients that do this with us, they see immediate savings and you'll walk away with a clear roadmap going into 2026. This is specifically for service-based business owners who are done writing big checks to the IRS and they're ready to take control of their tax situation before the year ends. Quick side note, if you want that complete 75-page financial playbook that I mentioned earlier in the video, covering everything that we discussed today, plus over 25 advanced strategies that you can start putting into your business, you can grab it for free at the second link in the description. Now, once you've mastered these fundamentals, I want you to watch this video next, where I'm going to break down what a complete tax strategy actually looks like. It's going to include all the advanced techniques that I use that have literally saved my clients $30,000 to $100,000 annually. So here's my final question to you. Are you just going to keep treating your tax bill like some fixed expense that you have no control over, or are you ready to actually take control of it like a real business owner does? That's you. Hit the subscribe link for more tax strategies that actually work, and I'll see you in the next one.